Hello, I'm Bernard Hickey from interest.co.nz and welcome to a special report on interest rates. Because today there's been some big changes in term deposit rates from most of the major banks. ASB, Bank Direct, Westpac, National Bank, BNZ and Kiwibank have all cut their term deposit rates by between 10 and 50 basis points. And to find out all the rates, go and have a look at our rates tables. Just go to the investing section on our website from the front page and you can see there the rates up to 1 year and 1 year and beyond. So what's going on here? Why are the banks cutting their term deposit rates when we haven't had a change yet from the Reserve Bank? Have a look at this chart, which shows the wobbly line at the top, which is the 90-day bank bill rate, and that's been falling for the last couple of months in anticipation of the Reserve Bank cutting interest rates. And you can see that flat line along the bottom is the Reserve Bank not cutting interest rates. It may happen this Thursday, we're not sure, but certainly the next couple of months people are expecting the Reserve Bank to cut interest rates. So the banks are saying, well, we're passing on those lower expectations of interest rates to term deposit account holders. But you're asking, so does that mean we're going to have lower mortgage rates? Well, it turns out maybe not, because the banks are saying, or at least a couple of them, that their funding costs internationally for money have risen. About a quarter of all funding that the banks raise at the moment is from the international markets, and those prices, those interest rates, have risen quite sharply in the last couple of months because the credit crunch has come back with a roar. That means the bank's profit margins are under intense pressure. Now the normal way that there's a couple of ways you can improve your profit margins if you're a bank. That's to increase the rates you pay for mortgages or to cut the rates you pay for term deposits. Now at the moment there's not much demand for mortgages around because of the trouble in the housing market, and that may be holding back the banks as well from cutting their mortgage rates. So what are they doing? They're cutting their term deposit rates to help improve those margins. And that's because at the moment there's huge demand, natural demand from people putting money into term deposit accounts. There's a flight to safety going on from some of the riskier finance companies into bank accounts, and also from the share market, which is having a tough time at the moment, into bank accounts. So the banks don't necessarily have to offer high rates to get that money in through the front door. So what does this mean if you're about to fix your term deposit account or you're about to fix your mortgage rate? What it means is that term deposit rates are likely to keep falling. So if you can fix longer term, that may be best for you. But if you're looking to wait for lower mortgage rates, you may be waiting a long time. I'm Bernard Hickey. That was a special interest rates report for interest.co.nz.